All right, listen up. The suits want you to believe the market is this big, complicated, unknowable thing. It's not. It's just a program. It's a matrix. And like any code, it has glitches, anomalies the insiders use while they're telling you to just buy and hold for the next 40 years. Well, this week, we found one, and it's a big one.
Yeah? Sound familiar? I mean, this is the experience of every single retail ape out there. That feeling of absolute whiplash. You think you're seeing the all clear, you make your move, and then bam! The system just rewrites the rules in the middle of the game. You get chopped to pieces on the way up, and then you get liquidated on the way down. It feels personal. It feels rigged. And you know what? It is. Unless you can see the code.
So, the big question is this just random chaos? Is it totally unpredictable? Or is all this turbulence actually a coded signal? What if these brutal, gut-wrenching reversals are a pattern? A pattern that not only shows us where the big money is going, but also reveals this hidden volatility trap that's just designed to suck you dry. Stick around, because we are going to break it wide open.
Okay, first we got to talk about the official story. This is the blue pill. You know, the narrative that mainstream finance, the talking heads on TV, and your uncle at Thanksgiving are all pushing. It's designed to do one thing: keep you calm, keep you compliant, and keep you slowly feeding your money right into their machine.
And the message is always the same, right? Just give up. You can't win. It's too hard for a little guy like you. They tell you that active trading is a sucker's bet, and your only hope is to just pour your life savings into an index fund and pray to God you have enough money in 40 years. It's a fantastic strategy for them.
And look, this just perfectly illustrates the problem with their whole safe path. The finish line is always moving farther away. This is from the Financial Independence subreddit, right? First, the magic number to retire was $1 million. Then it was 1.5. Then it became 2.3. And now, to actually own a house and retire, you need 3.5 million. The slow path is just getting slower. It's not a finish line, it's a treadmill.
All right, so let's get to the red pill. Let's talk about the reality that we're all actually living in. You know, the world of insane volatility, meme stocks, and that desperate hunt for any kind of edge. The world where waiting around for 40 years is just, it's not an option. And this is the other side of it, isn't it? This is the raw, painful truth of trying to play this game without a system. You get that dopamine rush from a winning trade, and then the absolute crushing shame when you blow up your account. We have all been there. It's the tuition you pay for trying to walk through the matrix with a blindfold on.
And this is the most important thing you have to understand. Stop treating the market like it's your savings account. It's not. It is a high-stakes casino, and it has been engineered from the ground up to take your money. But here's the secret. The house always has a system. And if you can figure out what that system is, you can start playing with their money.
So this is where we flip the script. This is where we go from being the gamblers to becoming the house. We have the tools, we have the data, we can actually decode the signals the market is sending out every single week. This is the QuantApe Toolkit. So forget the news, forget the narratives, we just follow the data. Every single week, the mission is exactly the same. It's a simple 3-step scan. First, we check the fearometer. We want to know what the market's emotional state is. Second, we fire up the money GPS to see where the big institutions are quietly parking their cash. And third, we go hunting for the hype tax, that hidden premium that shows us exactly where the biggest traps are being set. Okay, let's start with tool number 1, the fearometer. The suits, they call it the VIX curve. But really, all it is a direct pipeline into the market's brain. Is it scared or is it greedy? A steep upward curve? That's greed and complacency. A flat or inverted curve, that's pure panic. It is the first and most important signal we look at every week.
And the hard data backs this up. This is the St. Louis Fed's Financial Stress Index. As of last week, it's sitting at negative 0.13. So what does that mean in ape terms? It means there's no fear in the system. The plumbing's working fine, the suits are not panicking. And that gives us a green light to actually look for opportunities instead of running for the hills.
All right, so with fear off the table, we move to tool number 2, the money GPS. Now, the suits call these relative rotation graphs, or RRG. But forget whatever the guy on TV is screaming about. This chart shows us plain as day which sectors are gaining steam and which ones are losing it. It's literally a map that tracks the footprints of the whales.
So when we run our scan, we're not looking for headlines. We are hunting for glitches. We're looking for those subtle shifts happening right under the surface. And this week, the Money GPS, it picked up a very clear rotation, a glitch in the flow of capital that the mainstream has not caught on to yet.
And boom, here it is.
The data from our RRG scan for the week of November 10th shows a clear pattern. Big money is flowing into the boring stuff, the defensive and cyclical parts of the economy. We're talking materials, energy, financials, staples, and healthcare. They're all in the improving or leading quadrants. This isn't a bet on some high-flying tech stock. This is a quiet, methodical shift into the backbone of the economy. And this is our watch list.
Okay, now for the final piece of the puzzle. If that's where the smart money is quietly going, where are they setting the trap for everybody else? And this brings us right back to that hidden danger I talked about at the beginning. See, while they're loading up on boring old industrials, they are laying a massive volatility trap in the high flyers that everyone else is still staring at.
Now, to get the trap, you have to understand what we call the hype tax. Officially, it's called call premium. But just think of it like this. It is the price you pay for hype itself. It compares how much the options market thinks a stock is going to move versus how much it actually moves. When that number is high, it means you are paying a massive tax on pure hype. You're buying a lottery ticket that's probably not going to cash.
And this week's scan, man, it flagged these tickers like crazy. MSTR, SNO, DOCU, they all have a hype tax above 0.7. That means call options on these stocks are ridiculously expensive. The market is pricing in this massive moonshot that's totally disconnected from reality. This is the trap. The system is baiting you to buy these lotto tickets at a huge markup.
And this is where we flip the whole script. The signal from this data isn't to FOMO into these stocks. No. The real signal, the QuantApe signal, is to do the complete opposite. It's to become the house. The signal is to sell the hype, to collect all that juicy premium from everyone else who's paying the hype tax.
So let's just recap everything. We've downloaded the data, we've analyzed the code, and we've spotted the glitches. Here is your mission briefing for the week ahead.
All right, here's the alpha for the week, plain and simple. First, the official story. It's just noise. Ignore it. Second, the glitch is clear. Institutions are rotating into defensive stuff like materials, staples, and energy. Third, the trap is set in those high-hype names like SNO and MSTR, where the call options are just stupidly overpriced. And finally, our ape theory is that the probabilities favor selling that premium, not buying it.
Okay, and you know I have to say this, the mandatory disclaimer. This is not financial advice. I'm not your dad's financial advisor. This is just educational banter, okay? The market is a casino. All we're doing here is analyzing the probabilities at the table and sharing what we find. You have to do your own damn research.
We are watching this chart like a hawk, and while you wait for that next candle to print, go grab your free gear. Sign up for Public to get $20 in free assets, check out Webull for that BTC promo, or go grab your NVIDIA stock on Moomoo. All the links are in the description. Smash the like button, subscribe to the tribe, apes together strong.
All right, now it's your turn. We've shown you the glitches that we found in the Matrix this week, so what are you seeing? What's the biggest anomaly lighting up your screen right now? Post your signal down in the comments below. Let's decode this thing together.